Good afternoon, everybody. This is Mike Lewis with HealthMonics. Thank you very much for coming to join us today in our first webinar after the pandemic has started. I wanted to let everybody know that we are here for you at HealthMonics. We understand, but are not familiar with what you are. We are familiar, but don't understand exactly what you're going through. But we're here to help you. We're here to make sure that we get you the information that is needed to help your practice, whether that is around MIPS or if it is related to the healthcare industry, and we have specialists that can help you answer some very important questions. We will be having webinars coming up routinely in the next couple of weeks. We have one on a brand new product called Revlytics that will be launching in the next, or that is launched, but that we will have more information on a webinar coming out next week, as well as we are doing a webinar with our partners, Chirpy Bird, next week on telehealth, which they'll share some more information with you on. So for your MIPS needs, we are here for you, but when it comes to your financial options, we're gonna turn that over to our partners, Joy Rios and Robin Roberts at Chirpy Bird Inc. So thank you very much for joining us today. And if you have questions, you'll see the question bar on the GoToWebinar page, as well as the handout for today's information. Thank you very much.
Thank you, Mike. I am Robin Roberts, and I will be doing the bulk of our presentation today, but I'm joined by my esteemed co-founder, Joy Rios. She's also a 5-time author in quality payment programs and health policy, and is also a health IT subject matter expert. Together, we run Chirpy Bird Incorporated, where we help independent practices translate the complexities of health policy and all that's going on in the marketplace, including MIPS, to help you guys realize improved quality and payment potential in the practice. So today, we all know these are unique and uncertain times, and as such, we want to take some time to talk about federal programs and financial options and important considerations that are available to you that can help sustain your practice. So today we're covering the latest information as recently as this morning from Health and Human Services on the CARES Relief Act, CMS Payment Advance options, 2 SBA options, the Economic Injury Disaster Loans, and the Paycheck Protection Program. We'll also talk about some other traditional choices and programs going on right now that you may want to take advantage of, and just general borrowing considerations at current. So let's go ahead and dive right in. The first thing I want to talk about is a very recent update, and this recent update comes to us this morning. It is about the immediate infusion of $30 billion into the healthcare system. Recognizing the importance of delivering funds in a fast and transparent manner, CMS is distributing immediately payments via direct deposit beginning April 10th, that's today, to eligible providers throughout American healthcare. These payments are not loans. They are funds that will be directly provided to you that do not need to be repaid. So let's talk about who's eligible. All facilities and providers that received Medicare fee-for-service reimbursement in 2019 are eligible for this initial rapid distribution. Payments to practices that are part of a larger medical group will, of course, have their payments sent to the billing office where you receive reimbursement now, or to those direct accounts. This quick dispersal of funds will provide relief to both providers in areas heavily impacted by the COVID pandemic and those providers who are struggling to keep their doors open due to healthy patients delaying care and canceling elective services. So how much are you going to get? That's what everyone wants to know. Providers will be distributed a portion of the initial $30 billion based on their share of total Medicare fee-for-service reimbursements in 2019. This does not include Medicare Advantage payments. In order to figure out how much you're going to earn, a provider can estimate their payment by dividing their 2019 Medicare fee-for-service revenue by 484 trillion and multiply that by the ratio of $30 trillion. We've provided an example here to you today for a practice that billed $525,000 in Medicare. Again, not Medicare Advantage, but Medicare in 2019. The direct deposit or physical check, which is congruent with how you receive payment now, will be direct deposited to you, or a paper check will be provided. These payments will start being dispersed again as early as today. There is some action you need to take on your side. Ultimately, through the slide deck that's been provided, and I believe you can see that down in the attachments that HealthMonix is sharing with you, there is a web page link where within 30 days of receiving payments, you need to sign an attestation confirming receipt of these funds and agreeing to the terms and conditions of this payment. Again, this is an option where the money does not have to be paid back. So, appropriate information here if you decide to decline these funds, and the confirmation of receipt of these funds to keep them is going to be provided soon on the Health and Human Services website. This is a really important option that we want to highlight. It is highly suggested, since it does not have to be paid back, that you would consider taking advantage of this. You will see these funds in the coming days, provided you billed Medicare in 2019. I want to talk about another CMS option that is available to you. This is distinct and separate from the $30 billion rapid infusion of money that we just talked about. This distinct and separate option is the CMS Advance Payment option. Again, in order to increase cash flow to providers of services and suppliers impacted by the COVID pandemic, CMS has expanded its current accelerated and advanced payment program to a broader group of Medicare Part A providers and Part B suppliers. An accelerated advanced payment is a payment intended to provide necessary funds when there is a disruption in the claim submission and/or claims processing. These expedited payments are often offered in circumstances such as national emergencies like the one we're dealing with. CMS has invoked its ability to authorize and expand this program. When I mention this program, I would like you to think of a payday loan. That's kind of how what I'm about to describe works. First, you have to be eligible. We have to have billed Medicare in the last 180 days to qualify for advanced accelerated payments. You have to not be in bankruptcy and not be under active medical or program integrity review or investigation, and you can have no outstanding delinquent payments due back to Medicare on matters of overpayment. What you have to do is, if you meet eligibility criteria, and I'm sure many people, if not all on this call do, you need to contact your MAC. You go to the website, you reach your respective MAC for your state or jurisdiction, and you are going to complete a one-page application. It is very, very simple. And what Medicare will do is, within less than 7 business days of receipt of the request, they will provide you a 3-month payment advance based on your historic Medicare payment. You heard me reference that this is very similar to a payday loan. That is because this money, this payment advance, will be recouped 120 days after payment is issued. So you can absolutely request this advance. It's very fast money. It's very easy to access. The application to do so is very simplistic. The most challenging part is figuring out your last 3 months of Medicare payments. But this is a great option if you are looking for a quick cash advance. And so we would strongly encourage you to consider applying for the accelerated payment now, but consider setting that payment aside in a separate account to prepare for cash flow concerns that would start 4 months from now when recoupment starts. So this is a great option, but again, this money will be recouped, and it will be recouped by deducting the money back from your claims. This is not a proportional adjustment or a percentage of adjustment. It is a 100% adjustment until CMS recoups their money on this 3-month payment advance. Hence the analogy about it being similar to a payday loan. We are getting the money now, stocking it away somewhere else with consideration to use it later when recoupment would begin. So the CMS Advance Payment option is available to you. It is quick, it is simple, but this money will be recouped. The next thing I want to talk to you about are 2 additional options that are available to you, courtesy of Small Business Administration. The first is the Paycheck Protection Program, and the second we'll address is the Economic Injury Disaster Loan. These are 2 main options that practices in small business have to obtain financial support during the coronavirus outbreak. It is worth noting that organizations can receive both loans and that an EIDL loan can also be refinanced into a PPP loan. So let's first talk about the Paycheck Protection Program. This enables businesses to obtain up to $10 million in loans that are 100% forgivable if you do not lay off any employees or if you rehire employees you have already laid off. Businesses can obtain 2.5 times their average monthly payroll costs, again up to that $10 million ceiling. Costs that can be included under the use for payroll that you see here includes worker salary, paid leave, healthcare benefits, and commission structures. Also, uses here include the interest of any mortgages, rent, and utilities. Average monthly payroll costs will be calculated using either monthly costs the business experienced from February 15th to June 30th of last year, or the average monthly cost the business experienced from January 1 to February 15th of the current calendar year. The window of January 1 to February 15th is if the business did not open until this year. So most existing businesses are going to calculate 2.5 times payroll based on the February 15th to June 30th, 2019 window. If you have not already applied for PPP, you should begin preparing documentation that demonstrates your average monthly payroll and operational costs, including payroll, tax filings, and your rental contracts. So let's talk about the terms of the PPP option. These loans are 100% forgivable, depending on whether businesses lay off workers and how you use the money. So it's important that you understand in receiving these funds what the rules of the road are. So the loan will be completely forgiven if businesses do not lay off workers at all, or if they rehire workers by June 30th of 2020. If a business lays off workers and does not rehire them, that portion of the loan, those payroll expenses, would not be forgiven. If a business reduces the wages it pays out to a worker by more than 25% during the time it's using the loan, that part of the loan would also not be forgiven. If the loan is used for costs that are not approved by the bill, those portions, as you might have guessed, are also not forgiven. Recoupment of the PPP option, repayment of PPP, they allow deferral for up to 6 months. The maximum term of repayment for any unforgiven portion is 2 years. So to recap, PPP is predominantly aimed at covering payroll costs of up to $100,000 per employee, but can be used to address other expenses as well, like utilities, rent, and mortgage interest. Loans used to cover these allowed costs are 100% forgivable at the end of the 8-week period during which they are used. But if the money is used for other expenses, that portion would not be forgiven. The last thing I want to say about PPP is that you probably heard a lot of headlines at the end of last week and even still early this week about how there has been a lot of false starts, how you have to be an existing customer of a bank, or how you have to have a loan out with a bank. I want to highlight that U.S. Bank, Huntington Bank, and several others are definitely working with non-customers. So check with your financial institution first. While this option comes to you courtesy of the SBA, you do have to apply for PPP with a private lender. So be on the lookout for that, but please know that people are accepting applications, they are being acknowledged, and they are being processed. The next thing I want to talk to you about is the Economic Injury Disaster Loan Money, which has two components. It sets up a grant program that would provide a $10,000 emergency advance that businesses won't have to pay back. And the other component funds a low-interest loan that organizations can use to cover operating expenses, though you will have to repay these funds. The loan amount that organizations can request is based on the amount of economic injury that they have sustained because of coronavirus. So for example, if you run a practice where your average monthly revenue is $100,000 and we are down half in volume, procedures, not making this money up otherwise, we are incurring a 50% injury or $50,000 a month in economic injury. If a business is approved for the grant component, it will receive them within 3 days of approval according to SBA. Any business that applies for an EIDL loan can indicate that it is interested in the emergency advance of that $10,000, and the organization can still receive it even if they are not approved for the loan. This is one of the most unique parts of the EIDL option. Currently, the EIDL application is already live and accessible on the SBA website. There has been a lot of information about the link being down, and I would say that I would try and reach it in off hours, but that option is available to you today. The terms of the EIDL, again, there's that $10,000 grant component that you can apply for that is 100% forgivable and can be used for a wide range of business needs: payroll, fixed debt, accounts payable, and other expenses you may not be able to cover because of the disaster impact. Aside from that $10,000 grant, remember the rest of the loan is not forgivable. The annual percentage rate is 3.5% and can be as low as 2.75 if you are a nonprofit. Repayment can be deferred up to 6 months, and the maximum term of repayment here is 30 years. So to recap, under the EIDL, the grants and loans can be used for a broader array of costs, including the rent, mortgage payments, salary, business operational needs. And because small business owners don't have to worry about as many rules around forgiveness, there's slightly more flexibility regarding these funds. So if you're going to look into one of these options, definitely consider taking action now. We recommend that organizations get started immediately to take advantage of assistance program while funds are available. While the banks are getting organized, we still encourage you to reach out to your financial institution first for PPP and go to the EIDL to fill out the loan paperwork and consider electing the option for the $10,000 advance. It could be immensely beneficial. Other choices. Traditional lending is still an option. A line of credit, a business loan, or a personal loan. And a caveat here, if you're applying for any SBA option, they will not preclude you from doing so if you have one of these other lines of credit or personal loans out, and they're not looking for you to tap these resources first. So this could be a great option if that is something else you need. Another program that's going on is the Employee Retention Tax Credit. This is a fully refundable tax credit for employers. The credit is equal to 50% of qualified wages that eligible employees pay their employers pay their employees. The Employee Retention Credit applies to any wages paid after March 12th of this year and before January 1 of next year. The maximum amount of qualified wages taken into account with respect to each employee for all calendar quarters is $10,000, So that means the maximum credit for an eligible employer for qualified wages paid to any employees is $5,000. It is a remarkable note to let you know that if you are taking advantage of the employee retention tax credit, you are not eligible for PPP under this legislation. Other SBA options, if you currently are borrowing from the SBA, they are offering relief where the SBA will automatically pay the principal, interest, and fees of current 7A, 504, and microloans for a period of 6 months. The SBA is also, if you're already borrowing from them, paying principal, interest, and fees of any new 7A, 504, or microloans issued prior to September 27th of this year. The SBA Express Bridge enables small businesses who currently have a business relationship with SBA lender to access up to $25,000 quickly. So whether you have borrowed or you are going to borrow under one of these other SBA options, there is definitely a lot of relief being provided through these programs. The other thing I would remind you to do, there are a lot of local programs going on. I'll give you an example. I live in North Carolina Rapid Recovery, North Carolina Hub. They have some subsequent programs other than the ones we're talking about this afternoon available to small businesses. So these can be important things to consider as well. So make sure you're doing a local search in addition to all of these if you're looking to further insulate your practice financially. Important considerations. If you do not already have a budget and you are not insanely aware of what your cash flow is, sit down and take a look at that. Look at the shift in revenue that you're experiencing. Look at your expenses. Consider essential and non-essential spending to understand what your profit ranges are projecting for the next week and for the next 4 months. I think it's in these uncertain times when no one knows what the future looks like, this is really important. If you're going to take advantage of the PPP loan, know that you can maintain your head count. That is critical to be playing by the rules of the road. We definitely want to make sure that we are embodying the spirit of the loan so that we can play by the rules of the road, which means that we can anticipate not furloughing or laying other people off. That reduction in wages and a reduction in headcount is going to equate to an unforgivable portion of that loan. Forgiveness is in the details. Make sure you are using this information for the right uses. Make sure you are documenting. I'm sure you saw that PPP and EIDL can both be used for payroll. You have to make sure that we are keeping a good track record of where those payroll dollars are coming from within each respective loan so that we can make sure that it is exactly forgivable under the terms of the legislation. Consider the unknowns, and I think there's a lot of them. We know that maybe we're just doing some basic telehealth now. We know we may have to be closing doors. If your state is one of the few that is not already locked down, what might that look like? What might that do to your patient volume? Play out the worst case and do it on paper. Look at your revenue. Look at how many people are coming through the door. Look at your essential and non-essential spending and consider what it would look like if it got cut in half again, or if it got cut by 3/4. Could you still sustain yourself with one of these options, or would you need to consider additional ones? I know that these are uncertain times, and so I certainly hope that the options we provided you, the Health and Human Services that is coming direct to you, which is absolutely forgivable. We just got to sign the receipt and acknowledge the terms. The CMS option, which is the recoupment option that is paid back 120 days later. The PPP option, which is 100% forgivable as long as, again, we play by the rules of the road and use it for the right reasons. And the Economic Injury Disaster Loan, which has that really unique and very helpful $10,000 forgivable grant in it, are all things that you might consider. If you are looking for resources, I highly encourage you to only seek information from websites that end with a .gov domain extension That is where you're going to find the most reputable information. Our deck today leaves you with the information about the CMS Advance Payment fact sheets, the SBA website for the two options we talked about, and some really helpful U.S. Chamber guides for the two SBA loan options that are now available to you. We're also providing a link for the banks that are accepting PPP. We know not all of them are. Some of them certainly have some constraints, but we want to provide you clear guidance on what is available to you today that you can access. So I think, Mike, I'll hand it back to you. If there's any follow-up questions, we're glad to answer anything we can. If we don't have time to get to your question, though, we will certainly follow up on all of them via email in the coming days.
Thank you very much, Robin. I appreciate it. There are a number of questions, and I'm not sure. We also have Joy Rios on here. I don't know if she wants to hop on and ask some of the questions to you as well, so that we make sure we get through them. Give me 1 second while I pull them up. There are a lot of longer questions on this one, so very interesting. So let me see if we get some to the people that are still on here. So give me 1 second. All right. If obtain loans P3, etc., to support the clinic staff, do they only receive pay when they are actually working in the clinic or virtually? Or is it to support them and keep it afloat even if clinic doesn't have enough work and they are not working?
Yeah, that's a really great question. So I think that what we're talking about here really is flexibility, right, Mike, with the PPP option?
Right.
Is that the kind of the spirit of things? So there's actually some additional guidance issued today by the administration for exactly this reason, where they are trying to hold you harmless for that. As long as you are maintaining that head count and they are working hours, you can absolutely still do PPP. I will absolutely share the updated link about that. I think that's the biggest fear, right? What if I have no one? Or what if I am reducing wages considerably? It's about maintaining that average. And so as long as you're maintaining that head count, that is really the critical component of forgiveness. If you have someone that their head is just not in it, we don't have that going on, and they're working 20 hours instead of 40 hours, the flexibility guidance issued this morning is meant to embody the need for that and still hold you harmless. So I'm sorry I don't have more details at my fingertips, but I will share that updated link. You should know that CMS and a lot of the big societies and groups are working hard to advocate for exactly that, because they understand how fluid and dire that those circumstances are. So please know that that is not a deal breaker. That should not stop you from seeking PPP. But we certainly wouldn't want to cut those people or furlough them. But there is an allowance for flexibility of hours, times, and duties.
Gotcha. So a follow-up to that, and a couple people asked the questions about concerning providers and mid-levels and so forth. What about those that don't have enough work for them to see patients and so forth? Should they be applying for unemployment, or what does the loan include payment to staff for them as well, or providers? How does that work?
So you have to know that the PPP program is meant to maintain the head count, that they should not be seeking unemployment, that really the guidance around the bill here is to keep them on, to keep your well-trained people, to keep them engaged. And so next week we'll be talking digital delivery of care, leveraging telehealth, all the billing nuances next Thursday, as you mentioned, Mike, and bringing them all the latest guidance, because the rules are changing. But PPP is intended for you to keep them and maintain headcount, because it is truly cheaper for the federal government to do this than it is for them to have unemployment, even though that's slightly more handsome, that your employees up to $100,000, that the PPP is meant to keep them on. I know that means getting creative, and I think we'll be addressing some of that next week on leveraging telehealth. But I would recommend not having them do it if you can mitigate that. And that is what PPP is all about. the average headcount you are asked to maintain, unless you are a brand new business in 2020, really goes back to a period of time last year, about the summertime, and maintaining that average headcount. So if you can keep their headcount with the PPP, with the Medicare, with HHS's infusion of cash, that's what they are looking for you to do. Otherwise, you could be penalized.
Great. Thank you for that. We have another question that seems to be on people's minds as well. This one in particular is, there is a GI practice. They are a GI practice and want to find out, they don't treat or diagnose COVID, but they received a payment from HHS today, and they would want to know if they need to return it because they don't diagnose it.
No. So I think you heard me say in my statement, and maybe this is causing a bit of confusion, that not only is it just for those heavily impacted by COVID, but it is for providers all across America. Eligibility, Mike, is anyone who got payment in 2019. So if you're a single doc practice and you billed just a grant to Medicare in 2019, and you're a doctor of chiropractic medicine, you are going to see a payment.
Got you.
Yeah, great question. So they did make that known, but this money is for you. So in that example where we talked about the $525,000 that they're going to have about 32 grand hit the bank, that might be a dermatologist. I don't know. It could be anybody, but no, don't pay it back. Accept the terms. Don't go spend it as a down payment on the car. Use it to keep running your practice. That's the intent.
Gotcha. Great advice. Really appreciate that, Robin. This question, actually, I thought of too as well. What about those providers that don't see any Medicare patients that are, like a pediatrician, for instance?
That's a great question. So there are a lot of private payers and other people looking at how they might be able to provide some relief. Unfortunately, those two CMS options at current don't apply to them, but the 100% forgivable PPP at 2.5 times your monthly payroll, and then that $10,000 advance is highly recommended. You heard me say that the recommendation for CMS would be to take that money, bank it to the side, and then use it 120 days from now as a last resort, since there's such a strong recoupment terms on it, is the way to go. If I were otherwise looking at this and considering what I would do, that accelerated payment, grab it and put it in the bank. But if you are a pediatrician or you don't bill Medicare and you can't take advantage or aren't going to be subject to the first two options, contact your bank about PPP. Apply as soon as possible. Use the money as true stimulus so you get 100% forgiveness. And then I would get that EIDL and apply for it based on economic injury. And I would play by the rules of the road on the $10,000 advance and do my best not to touch the other funds so that I might be able to pay it back when this crisis ends or lets up. And again, I really think that our robust delivery of telehealth and what we have coming next Thursday on Getting Creative in leveraging the delivery of digital is something that those folks that are not engaged with Medicare, high-risk patients, or emergencies right now could take advantage of. That's a great question.
Great. What about clients that, or what about providers, clinicians that are solo 1099 providers? What are their options?
That's a great question. So I will tell you, my husband is a 1099 psychologist, and I think we were talking about this last week, Mike. If you are 1099, one of the most unique things about all of the legislation going on in kind of our gig economy, not just a 1099 provider or a physician, but the Grubhub drivers and all these other people, they are able to take advantage of PPP and EIDL as well. So I will tell you unabashedly, my husband is a 1099 as a psychologist. He applied for PPP and was able to use the supporting documentation of his 2019 taxes. He could have used the year prior, but we had just filed. And he's applied for the EIDL with the hopes to use the $10,000 per the rules of the road and hopefully not have to touch the rest. So even if you were 1099, apply for these options. It applies to you. The bill is given consideration for that.
Great. Another question. These are great questions, everybody. Really appreciate that. Very intuitive. This question is when should I apply for the EIDL program? Normally, I won't know if my practice is down at the end of the month. Can you estimate it?
Apply now. Apply now, because there is only a portion of that money through this all of the packages that have been passed and all of this final interim amendments. Apply now. When the money is gone, guys, it is gone. And the SBA made an exception to redefine small business is 500 or fewer. I mean, for goodness sakes, Mike, that's even like a small healthcare system in some counties, right? Or states.
Right.
So 500 or fewer, think about the number of people that can be there, or the large health systems that are made up of all these mini TINs. Apply now. Use the $10,000 advance. Put it away. You and any of these options where you get the money there, even when there's repayment, you are getting the interest on it instead of the federal government. Get it and be prudent with it. Use PPP first. Use the 10,000 EIDL grant second, and consider. I apologize. I think I lost my computer connection. Can you still hear me, Mike?
I sure can.
Yeah, apologies. And then use the CMS payment recoupment last. And of course, HHS comes in front of all that because it's free money. But yes, absolutely. Like, take advantage of it now. Take advantage of it yesterday. There's really no reason not to. Joy, did you want to weigh in on that at all?
Joy's actually not able to get
All
her
right.
voice going. Sorry about that.
Got it. All right. Yes, apply now.
You got it. So just a couple things before I continue with questions. One is that I hear there are a couple of people that are having issue with the sound, so that we will get this presentation out to everybody immediately following sometime this afternoon. You'll get the presentation and the slides, as well as a couple other questions that came in. But one thing I wanted to ask everybody while you're still on is if you have topics that you'd like us to discuss in the coming weeks as you are stuck with this COVID and the pandemic, please put it in the question area, and we'll see how many of these that we can get to in the next coming weeks, because we would love to provide you with the information you want. I applied for the SBA 2 weeks ago and no response. Do you have any idea why that would be?
Yeah, absolutely. So Chirpy Bird is also a small business, and the information and advice we're dispensing today and its recommendations are also followed by us. And I would say, while my husband has heard back about one option, which is PPP, we applied in about the same time frame you're talking about and are also experiencing the same thing. In calling to follow up on Monday, all I experienced was a super long wait line and was just told that they do have it, it's all in process, and I can't tell you anything more at this juncture than what you're already hearing about. And I am totally projecting a personal opinion here. I believe what they are attempting to do is, first and foremost, there is an unprecedented number of people applying for this stuff. There are the major companies in this country, but it is really run by small business predominantly, and they were not prepared for the influx. They knew it would be a lot, and it is. I think that's part of the reason you're seeing Health and Human Services. They partnered with United Health Group to make those disbursements happen 2.5 weeks ago so they could happen today. So I think it's coming in the coming days. You're going to see a lot of media pressure about it. And I guess, again, personal opinion, that they're really trying to make these disbursements in what will probably be the middle of the crisis. And I think that timing is possibly strategic. And again, personal opinion, but that's all I can say. Everyone else is waiting too.
Sure. The Medicare Advantage payment program that you mentioned earlier, it says that you don't have to pay them back, but they will recoup it later. Can you clarify a little bit on that?
No, so two different options. Health and Human Services CARES Relief, which is based on Medicare payments, does not have to be paid back. That is the auto deposit of where you get money now that is coming to you your share of $30 billion based on what you billed Medicare last year is what is totally free and clear. The CMS Payment Advance is the one that I talked about second. It is like a payday loan. You fill out a one-page application, we get the money in a week, but we owe it back 120, starting 120 days after issuance of payment. So 4 months later after you get that check, CMS Payment Advance is exactly that, an advance. They are going to pull it back from you later. Hopefully it's at a time, if you do need that money, when your waiting rooms are jam-packed again. But as of right now, that CMS Payment Advance, they give it to you within a week, you pay it back 120 days later off of all of your claims.
Great. Questions still are coming in. Thank you, everybody, very much. It's been a very interesting webinar experience. I'm very happy that everybody is able to get some of these questions answered. The next one I have here is, if you do not have any employees, you're a sole proprietor, are you eligible for the PPO grant for rent and utilities?
Yes, so PPP, usage of rent and utilities, absolutely. Get that money, spend it within the first 8 weeks on all of those allotted uses only. Again, to play by the rules of the road under the bill, yes. Even if you're a sole proprietor, even if you're 1099, even if you're just one person, PPP works for that.
Great. Can employees file for partial unemployment due to reduced hours and the practice still apply for PPP?
So as long as you're meeting the average headcount rules, yes. If you actually look at the U.S. Chamber's calculation under SBA, and you're an average practice of just 5 employees and one person, you were 5 employees last summer, you're still 5 employees now, and one person does that, and that happens with just one person, you will probably have a component of the loan that will not be forgiven, and you will be subject up to a 4% interest rate on those funds. So I highly encourage you, if you're applying for PPP, again, keep and maintain your head count.
Gotcha.
So short answer, no.
There's a number of questions around some of these percentages and so forth. This one here is a specialty practice that furloughed 80% of their employees, and they're trying to get the PPP loan. And if they are able to get that loan and they need to reopen their practice fully, do they rehire all their employees and ask them to stay at home? What is your suggestion if there's not enough work? And are they concerned about the need to furlough them again after the 8-week period is up?
Yeah, so if as long as you are rehiring by June 30th, that is what's going to be key for that 80% of furloughed staff. Because the FTE headcount at loan origination, based on that average historical period in time, has to match where you are going forward. And the bill says by rehire workers by June 30th. If you can meet that timeline, PPP can still work if you have existing furloughed staff. 80%, even if you're 5 employees or you're 500, that's a lot of folks. I would say that from where I sit today, based on the state you're in, how hard you're being hit, that's a little bit of a calculated risk right now because it's the middle of April. So take that into consideration. But if you are to rehire them by June 30th and that PPP is going towards those allotted uses, which again, primarily payroll, then yes, I would say that you would be safe. But 75% of that money has got to go to the payroll of the money you're given.
Gotcha. This one's an interesting question as well. Everybody has their own little thing, but I think it really means something to the group as a whole. So they have an ASC, and with the ASC, they only have 3 full-time employees, and the rest are on call. How do they handle those all on-call people? Do they need to pay them and count them towards the head count, or nothing because they're applying for PPP?
So they're going to ask you about your average head count back from February 15th to June 30th of 2019. Let's say that your ASC is 3 people now, Mike, but maybe it was 15 earlier. they're going to ask you for that historical headcount. You have to be able to restore that historical headcount by June 30th. And again, 75% of the funds have to go to payroll under PPP. So yes, it can work, but even though they are, quote, on call, it's really about where the dollars are going, not necessarily those individuals. If you're spending 75% of the 2.5 times payroll grant provided to you in payroll, and that headcount is back online by June 30th, you would be good.
Great. And there was a follow-up question to that from another provider that asks about what if their payroll average is much higher than their recent staff payroll? Should they?
I'm sorry, what if their payroll average is much higher than, say again?
Than what their recent is if back when the numbers need to be calculated compared to what they are as of late. Should they use the most recent numbers instead, or?
Nope. They're going to ask you which window to pick, and unless you're a new business, you're going to pick that old window. So it's really, they're offering you some grace. It's really going to be the larger amount for most practices that have been in business. And even if you're new, they're asking about your revenue from January 1 until February 15th of this year. So they're giving you the more handsome option, not just your current numbers.
Gotcha. A couple people asked me, where would I apply for the EIDL? Can you provide the website?
Yes, go to sba.gov, EIDL, and you will find, hold on, let me get it. I'm so sorry, I am off my screen. I will tell you because it is available now, and it is so important. And please make sure you are applying at the .gov extension. There are a lot of spoof websites out there right now. Make sure you're being smart about this. I am pulling it up now, Mike, so I can give you the exact link. One moment.
While
if you go
to
SBA.gov, you're going to click on the coronavirus page for small options, and you're going to go down under coronavirus funding options, and you will scroll down. There's PPP listed first and EIDL second, and you will click on the Learn More option, and the link to the application is right within there. We can certainly share that as soon as we're done here for where to get that. And again, PPP, if your bank isn't doing it, US Bank, Huntington Bank, and there's a few more, there are a lot of people trying to make a better name for themselves by playing nice in the sandbox under the rules of the legislation by working with non-customers. Look into it.
All right. A couple more questions if you have some more time. Nonprofit organizations with over 500 employees, are they eligible for either of these programs?
Yes, so that's really great question. So there is, yes, and they have slightly different rules of the road. They all largely apply. They're actually granted a bit more latitude in regards to some of the interest rates and things of that nature. They are definitely eligible under the PPP, but there is, who's going to look at the EIDL, I believe that is too. One moment, sorry.
No problem. There's a lot of information out there on these programs, so
I believe nonprofit is a yes on both. It is definitely on at least one of them. I have that, but let me. Yes, actually both. Yes, both.
All right.
Yes.
Terrific.
But they are granted a little bit more latitude again on some of the terms. It's not any worse than what I've said. It's just slightly better for them because of their business structure.
Great. Is it possible that a mid-level provider who is paid solely on productivity apply for the HHS care relief based on their Medicare billing from a previous year?
So Medicare, most typically, the mid-level provider, an FNP, a PA, is billing out under the practitioner. I would have some follow-up questions. So if they would like to email us at hello@chirpybirdinc.com, I would be glad to just have a further conversation and give you an accurate answer based on billing structure and how your payment is remitted to you currently by Medicare under that business arrangement. Great question.
Great. This one person asked that, or stated that they've been told by some banks that they need a business account with them to get the PPP loan. And I know you mentioned that there are a couple out there that were doing it for more or others. Do you mind mentioning those one more time that you've heard of?
Yes, I know for a fact that US Bank and Huntington Bank are working with non-customers, and we have provided a link to several that are working with non-customers. Do not let someone tell you no just because you are not a customer if you are trying to pursue PPE. Don't let your bank tell you already have to have a loan out with them. Go elsewhere. There are people that are doing that. US Bank and Huntington are just two of them.
Great. Where do you apply for the HHS CARES Relief Fund? Is that in the same spot?
Oh, if you have an NPI number and you billed Medicare last year, the administration, CMS, and Health and Human Services already signed you up. No application necessary. Just like you heard Mike say that GI practice said they got money today. Do they have to pay it back? No, you don't pay it back. It's coming to you. Ultimately, you'll sign a form in a portal to make sure you keep the money, confirm receipt, and play by the terms of it all, that it is given to you under this law. But you do not have to apply for the HHS option. That kind of the formula for equitable distribution of that rapid infusion of $30 billion starts today. If you billed Medicare last year, it is on autopilot, guys.
Are 2019 profit sharing retirement allocations that have not yet been deposited included in the calculations of payroll costs? That's very specific.
Yes, it is. So right now, retirement is not listed in the PPP. Go ahead and check with your accountant. You can go back and reference the Federal Register. To the best of my knowledge, the answer is no, it is not included. Apologies.
What happens if you apply and are approved for both PPP and EIDL? Do you have to choose one or the other, or can you take them both?
No, you heard me say earlier on, we noted that you can absolutely do both. Document the payroll use and where those funds are being spent so you make sure that the right monies are being used for the right things, right? Because as we said, mortgage interest is allowed under PPP, as is rent and utilities. But if you actually have economic disaster on the mortgage, that has to come from EIDL. So you can absolutely apply for both and receive both, and that EIDL can ultimately be refinanced into PPP. But you can do both, and I would encourage you to do so.
Great. Thank you so much, Robin. So there are a couple more questions on here that are a little that are personalized to certain individuals and certain types of providers that we will get back to you with the answers, those that we haven't gotten to on this webinar in a short period of time, by early next week at the latest. I wanted to take this time to thank Robin and her team at Chirpy Bird. They've been excellent partners of ours. We are here with HealthMonix to help you with your MIPS and your analytics. We have a MIPS Pro tool and Revlytics, which is our tool that is going to help you attack your Medicare costs as well as the cost program with MIPS. If you have questions, please feel free to reach out to hello@chirpybirdinc.com or us here at HealthMonix. We are here to help you. We are here to make sure that you get through this time because you are the most important thing to us, and that are the providers that are on the front line. So thank you very much for all your time today.